A very good afternoon to you. I'm Alicia Loxley. The Reserve Bank is about to reveal whether it's going to deliver a Cup Day interest rate cut. To talk us through it is Nine Business reporter Chris Kohler. Good afternoon to you, Chris. Most in the know believe that the official cash rate is going to come down today. What do you think?
Yeah, Alicia, the financial world certainly expects an interest rate cut, but one like they've never seen before, a partial interest rate cut. Because right now, the cash rate is sitting at 0.25%, and by the end of the day, it could be, well, within a few moments, it could be 0.1%. That's the official expectation, and it amounts really to...
And as we know, it really hasn't left itself with much ammunition, has it?
No, that's certainly right. We haven't seen a cash rate move since March when we saw two. One of them was an emergency movement, and we had... We've just had official confirmation that the cash rate has been dropped to 0.1%, so 15 basis points moving off the cash rate. It's a new record low now, Alicia, coming down from 0.25% to 0.1% today. We've never seen anything like this before.
We've been given our strongest hint yet that the Reserve Bank is considering cutting official interest rates again to a new record low. The RBA governor suggesting it might do the economy some good, but whether the banks pass it on is anyone's bet.
The pandemic hit Australia's economy like a sledgehammer. As businesses shut down in March, the Reserve Bank moved swiftly, cutting rates twice to 0.25%. But it warned further monetary easing or more interest rate cuts wouldn't do much. How times have changed.
But as the economy opens up, it is reasonable to expect that further monetary easing could get more traction than was the case earlier in the year.
That hint, a possible cut in the official rate to 0.10% either next month or in December.
It's been almost a decade since interest rates were cut on Melbourne Cup Day, and never before has the Reserve Bank fronted the media after such a decision. But an extraordinary year requires an extraordinary response.
Today's decision reflects the Reserve Bank Board's commitment to do what we reasonably can with the tools that we have to support the recovery of the Australian economy.
The bank has cut the cash rate from 0.25% to the new record low of 0.1%. And in moves still new in Australia, it's ramping up quantitative easing. That involves pumping $100 billion into the economy by buying government bonds.
Following 5 months of consistent declines in residential property values, CoreLogic's National Home Value Index moved back into positive month-on-month growth through October, posting a 0.4% rise. The lift in home values was broad-based, with every capital city apart from Melbourne posting a rise in values over the month. Dwelling values increased by more than 1% in each of the smallest 4 capital cities, with Brisbane, Adelaide, Hobart and Canberra housing values reaching a new record high. Although values were lower across Melbourne through October, the trend rate of decline has been easing since mid-September. With a drop of 0.2%, this was the smallest month-on-month fall in values since the COVID-related downturn in the country. The recent lift in home values coincides with a range of other indicators that have also improved over recent months. Consumer confidence has consistently improved since the virus curve has flattened, and Australians have responded positively to measures announced in the federal budget. In October, we saw a surge in consumer sentiment, rising clearance rates, and an increase in valuations for property purchases. Alongside this, we're also seeing persistently low advertised stock levels, which has also supported price growth. Despite a surge in new listing numbers, total advertised inventory levels remain close to record lows. The number of new listings added to the Australian housing market over the past 4 weeks rose by about 25%, while unit stock levels grew by less than 1%. Persistently low stock levels in the face of surging new listing numbers point to a strong rate of absorption as buyer demand exceeds advertised supply levels.